We're now going to be joined by Kunal Shah, Head Commodities Research at Nirmal Bang. Also, Vandana Hari, founder and CEO at Vanda Insights, also joining us. A very good afternoon to the both of you. You know, it is a very good afternoon to also be speaking to you right now, because given the kind of tensions that you have when it comes to Tehran and Washington, Vandana, I'm going to come to you first. Do you think that this geopolitical risk premium that we have is perfectly baked into the pie right now? Or do you think that there's more scope for the market to be looking at it a little more closely than they are right now?
Good afternoon, Shriyanshi. So perfect is not a word I would use in talking about the risk premium. The market is really flying blind here. So there is considerable concern, I would say a huge amount of nervousness in the markets as to what step Trump next takes with regard to Iran. The fears have been bolstered by reports, especially in the Wall Street Journal yesterday, that an attack, a limited attack, a quick, swift, limited attack could be happening in the next few days, which changed the narrative quite a bit from what we saw in the start of this week. There was reasonable progress in the second round of nuclear negotiations that happened between the two countries, US and Iran, on Tuesday in Geneva. And that had given the market a breather. But now the story has been flipped on its head. And from here on, and you were just mentioning, the US has given Iran 2 weeks to come up with a concrete proposal on the nuclear deal. That brings us to the date of around 3rd of March. Unless a US strike happens before that and everything is back to square one, I would expect at least until the 3rd of March, we may have the market remaining on tenterhooks, because there's just too much at stake here, particularly with an eye on the Strait of Hormuz. We know Iran held naval drills in the Strait of Hormuz, a vital choke point. You have nearly 19 million barrels of oil passing through it every day. So the risk of a wider conflagration of this tension remains very, very real.
Absolutely, and that, I believe, is a risk that market participants are also looking at very closely. You can see that very clearly being reflected in perhaps the prices as well. But Vandana, something else that you're looking at is that entire drop coming in. When you talk about the US stockpiles, you're looking at somewhere close to a 9 million barrel drop as well coming in there. How are you looking at the entire picture when it comes to inventories in US, and do you think that's also playing into prices? What is your outlook as well on that?
Yes, the EIA data that you're referring to for last week, actually, if you combine the decline seen in crude and refined products, together it was close to 16 million barrels per day.
It is a very big sort of drop that you saw coming in. 16 million barrels is something that you're talking about.
Yes. So not just crude stockpiles, but gasoline and distillate stockpiles also went down quite a bit. Now, a big part of this is distortion related to the Arctic blast, the deep freeze that we saw in the US last month. So I do expect the figures, both in terms of consumption and stock changes, to normalize in the coming weeks. Obviously, consumption is also high in the winter months, and production went down quite significantly. Upstream production in terms of oil and gas, and to some extent, the refining throughput went down as well. So that explains the abnormally high drop in crudes, in oil stocks in the US. But nonetheless, what happened was, coming in an environment when the market is already has quite a significant bullish bias, quite a significant risk premium. Obviously, those figures had a bigger impact, a bullish impact, supportive impact than what one might have normally seen in more normal circumstances if there was plenty of supply.
Absolutely, and thank you so much, Vandana, for helping us out with that take there. But you know what, I'll also come back to you in just a bit. I wanted to also turn the viewers' attention to gold and silver prices also right now. And Mr. Shah, thank you so much for waiting by. I quickly wanted to try and understand what you're expecting from here on. Do you think that precious metals seem to have scripted a little bit of recovery, at least when it comes to gold? Is that how you're looking at it right now, the market?
Absolutely. The markets, like Vanna said, for oil, the same thing applies to gold. The risk premium has already started to build in. I think right now at current price, already $100 of premium is built in geopolitical tension rising from Iran and US. And I believe that going forward, the 10 days deadline, we are going to see a lot of verbatism coming in, a lot of statements which are going to come from the both parties, and I think that are going to drive prices of bullion. Any sign of further escalation, and I think $5,100 on CME looks very much on the cards, and we recommend it in these kind of times to remain long in gold, because we don't know what is going to happen. So if there is a peaceful resolution taking place in next 10 days, you are definitely going to get that news, and that is the time you should exit your long position. But till then, I think one should remain in gold. It is likely to outperform in such kind of times.
No, well, absolutely. And Vandana, I'll come back to you when it comes to this one. Do you think that this tension between Tehran and Washington, do you think that it's going to be flipping the script right now? You did mention that it has really flipped the script on its head right now, but are you looking towards a continuation of that perhaps? Or are you looking at it as a little bit of a knee-jerk reaction at this point of time?
So I think a good way to answer your question for me, Shriyanshi, would be to talk about our base case. Our base case remains either a limited strike, which is short and sharp. The U.S. narrows the targets, certainly not going in for something that may spiral out into a widespread war or military conflict, and certainly not targeting something like a regime change, which has like 1,000 question marks on it. How the U.S. goes about it and what are the various repercussions of it. So a short, either a very short limited strike, which serves essentially as a warning, like to Tehran that gets serious, or Trump saying that I am very, very serious this time, and time is running out, and let's come up with a deal and do a deal. Or we have no strikes at all. Of course, it is in Trump's favor, and which is why you see the U.S. media continue to talk about that him having the option of strike. So he keeps that sort of option in the picture to continue to bear down pressure on Tehran. In this base case, I expect crude prices to remain to sustain much of the risk premium, because exactly what I mentioned earlier, that the market does not know where it can go.
No, absolutely, Vandana. And just quickly, I just wanted to also get a sense of, let's put a number to that sort of premium that you're looking at. Is there any price level that you're watching out for? If the US, decides that it's not going to play hardball now, it is going to, escalate the conflict in any shape or form. Let's not even put that bull case in the mix right now. What is the level that you're looking at when it comes to oil prices, perhaps in the next 7 days and perhaps in the near term?
So in the next 7 days or so, I do expect crude to sustain most of its current premium. I would say there's almost a $10 premium purely on account of the Iran tensions. So we have Brent sitting close to 72 now. Maybe it creeps up a little higher as the market perhaps thinks there is an increased chance of a strike. If a strike does not happen, or a very limited strike happens, as was my base case that I outlined earlier, I do not see much more upside in crude. That said, once we have a resolution, I would expect that premium to come back very, very quickly, come out of crude prices very, very quickly, bringing Brent back to closer to the low 60s. But that said, I wouldn't be counting on that happening anytime soon.
All right, then. And we will definitely, take your word for it as what's possibly going to happen, since we're lacking a crystal ball right now, and it is a very complex market as things unfold right now, and with those tensions in Tehran and Washington in the spotlight. Kunal, I quickly wanted to come to you before we wrap and try and get a sense of what you're more bullish on gold and silver in terms of the comeback that you've talked about in your previous answer as well.
Obviously, gold in such kind of time, more than you should have safety, because this can be a major escalation if this doesn't come out to be a peaceful resolution over here. And if it is not if it is a major escalation, then I think gold should really move up quite sharply from here. I think this is a moment where nobody knows, what is going to happen. and we should just hope for the best and hope that the sanity prevails.
No, well, absolutely, and Kunal, it does look like the gold market is also taking cues from what you're saying, also more bullish when it comes to gold, with that kind of gap that we've seen off late when it comes to the price moves for gold and silver as well. Thank you so much, Kunal, as well as Vandana, for joining us this afternoon.